All right, guys, looks like we're good to go. So yeah, if you guys have any questions, feel free to put them in the Q&A. Otherwise, I'm just going to be looking at the charts, for our active trades. And currently, I think some people are still in US 30. I know it stopped right at the exit, and then it retraced back. So some people are still in this trade, but it still looks good. I was thinking about re-entering right here, but unfortunately, I wasn't paying attention. So it looks like we had another sell signal here. And if you were applying the K2 pivot strategy, you can see right here, it was a perfect entry. So pretty much price came down, retraced from this point, rejected from the K2 zones up here, and then we got a sell signal providing for, a perfect entry in. So if you enter this trade right here, you would put your stop loss somewhere at the previous swing, which is right here. It looks a little too close, about 300 pips, but if you did take that trade and you followed, strict rules, you would have hit TP already. However, since it's too close, I probably would have put it at level 3 or level 4 for about 500 pips. And even if we did that, it looks like it's about to hit anyways. So if you guys are following, the scalp strategy, it's really lucrative. Like, you guys can literally take all of these trades here, like this trade right here. In the morning, you could have caught this huge shoot up. You can see price. So looking at the requirements, pretty much, you have to identify the trend, like I mentioned before, and then you identify an uptrend because the K2 pivots are spread out; they're all angling upwards. So this would be a strong uptrend right here. You can see price retrace right here for the second requirement, and then to finalize that second requirement, you want to identify a rejection off the K2 pivots, like you did right here. Once those two requirements are met, last requirement is just a K2 signal, giving you confirmation that price is going to swing in that direction. Right here, we had a valid buy signal. So if you took this trade in the morning, straight winner right there. Literally, if you put your stop loss right here at the previous swing, you'd make 500 pips. If you put it to level 3, 700 pips. If you put it to level 4, 1,000 pips. And if you put no TP, which I usually do, generally when I'm trading US 30, I'll just move my stop loss, but I won't put a TP so I can catch, this whole move right here. You can see it was a huge push up for about 2,600 pips. And even in that case, if you weren't following that and you were just putting your stop loss at the previous swing right here, you could have still locked in about 400 to 500 pips prior to it shooting up. So if you guys have looked at the new K2 strategy using the K2 pivots, you can see here it's really easy to use. Again, right here, price came down, retraced right here, rejected off the zone, another sell right there for another win. I mean, it's really easy, guys. Let me pull up the course. If you guys, I know some people weren't able to find it, but it's real simple. So let me just pull it up for you guys. Let's see, I'll open this right here. All right, so I'll pull up the course. So if you guys have access to the K2 strategy, you can see, sorry guys, let me fix this right here. Yeah, if you guys have access to the K2 strategy, this is pretty much the course of everything. And if you have trouble finding things, I know some people couldn't find the watch list. My watch list is right here. So under the getting started module, you'll see a tab for my K2 watch list. So if you guys want to copy, exactly what trades that I'm taking and have your watch list looking like mine over here, you guys can do that. It's very simple. Let me see what else people are asking about. Another thing would be the strategy. So if you go down the list, you'll see that we have the intraday strategy right here, the momentum strategy, the scalping strategies. This includes the K2 pivot strategy that I just showed you guys. And then if you guys want to see the breakdown of all of the K2 pivot strategies, it's pretty much right here. You only really need to know one of them because they all have the same exact requirements. And it's super simple. We have one question from Awab. Hey, Shawn, what time is good to take US 30 apart from New York opening? I mean, well, technically you can take US 30 throughout the day because it's a highly volatile pair. It's going to be moving throughout the day. So if you look at US 30, you can look at it from Asia session. You can see here it's still moving. It's not moving very fast, but even if you took this trade right here, it still would be a win for about 500 pips. But obviously, it's going to be the same time requirements for any other pair. It's always going to be a lot faster during US session and during New York session. You can see right here, see this was midnight right here. So from this point, midnight until US Open, you can see price moved about, or until London close, price moved about 2,000, 3,000 pips. It's a big move. Again, during US session opened at 6:30. So counting it from up here, you can see that it moved about 4,000 pips. So obviously it's going to move a lot faster during US session because it's US stocks. But yeah, pretty much you can trade US 30 throughout the day. It's one of the fastest moving pairs, even during Asia session. You can see right here. Let's see. So Asia session opened right over here around 14. So we'll just go from the low because I want to get the range from how much it moved from open till close. So this is going to be when London opened. So even during Asia session, it still moved about 2,000 pips. So it's never really dead. So you can literally scout this like pretty much all day. Like right here, we had this entry during Asia session that I just showed you guys. We had this entry right here for London session, US session, again for Asia session. There's really no specific time where you could really limit yourself because it moves throughout the day. Indices move a lot different compared to Forex pairs. So if you look at a Forex pair that is generally only fast during US session. So I'm going to try to find one that's, I think so USD CHF, you can see this right here from London. USD CHF only moves really fast during London session because obviously it's a European pair. And you can see right here during Asia, it moves really slow. So, comparing Forex to indices, indices move throughout the day. Like you can look at the UK 100. So let me take the indicators off. So if you look at the UK 100, you can see that it's moving pretty quickly throughout the day. But obviously during London to US, it moves a lot faster. But it's still moving. Like there's not really much dead period for any indice. You can look at the SPX, the S&P right here. Obviously during Asia, it's going to move a little slower, but it's not really going to move that much slower. I don't trade S&P, so I don't know how this movement really works. But if you look here from let's see, let's get the high. Okay, cool. So this is going to be the entire Asia session. It still moves about 155 pips, which is a lot compared to Forex. So if you're curious with with regard to volatility for indexes, they all move pretty well. So I think you kind of just have to understand that the indexes move completely different from Forex pairs. I mean, obviously for Forex pairs, you'll have to trade them during their market session, unless it's a major pair that's traded throughout the day. Something like Euro CHF. This pair moves really slow, and then it just picks up during London session. London and US right here, it's a huge move. During pretty much Asia, it's just stale, and then it picks up during London, and then picks up again during US. One question from Josh. Josh is asking, Shawn, if US 30 retraces back a little, would it be too late to enter? Let's see. So let's go back over here. Personally, I wouldn't enter it unless you have an entry. I wouldn't just enter it just because you think it's coming down. Because the thing is, as soon as you enter it when it's coming down, what's going to happen? It's going to shoot right back up. So I wouldn't just enter a trade just because it looks like it's coming down. I would enter it if there's an entry. So if we had a green retracement signal over here, like we did right here, if we get a green retracement signal and it shoots up, and then we have a sell signal like we did right here to provide another entry, then yeah, I would take it. Otherwise, I wouldn't just enter a sell because it always happens. You can't deny that happens all the time. Like literally, even myself, I think so what was it, yesterday? I don't know if Sam's here. Let's see, is Sam here? He might be here. There's one Sam in here, but yeah, Sam was me and Sam were in a sell for US 30 yesterday. I think it was somewhere, yeah, right here. So pretty much it was a trade from the day before, I think. But anyways, we were in that trade that was going on yesterday. Oh, I think it was somewhere over here. Yeah. So we were in a sell. Let me just line that up real quick. So we were in a sell. I think it was right here. I think it was like 2,000 pips, or maybe, I'm gonna eyeball it. It's about 2,000 pips, I think. No, because they didn't hit TP. We hit TP for that trade. So I think it was around 1,500. So pretty much, or no, did we hit full TP for that one? Let's see, yeah, it was today. Yeah, it was a risky one. So the risky one, I think we only hit TP1, right? Yeah, we hit TP1 and then it reversed. So we hit TP1 for about, so pretty much basically what happened here was I'm sure Sam was looking at the same thing I was looking at when I entered this trade. Well, we pretty much were here and TP hit, somewhere in the middle around, it hit really early, like right here. So it hit right here, and this is where we got caught. So pretty much, we didn't get a signal, but we did have the signal right here, but it was like midday already. So it was after the swap around 4 p.m. I mean, not 4 p.m., 2 p.m. My time, when the swap ended, somewhere around here, I entered a sell, even though there was no entry. And look what happened. As soon as that happened, price shot up like crazy. And this is why I don't chase trades. This is why I only enter when I have a K2 signal, because price came down and I literally entered like right here. I got so screwed because this thing came back over here and I was holding on to this trade for how many hours? For like 3 hours. I was tripping out because I was worried that it was going to reverse on me. And then luckily I got out right here for some profit, a small profit. I think it was like 300 bucks or something. And that's why I don't enter at random times. This would be an entry right here, but the problem is I entered way down here where there was no signal. There was literally no catalyst to show me that price was going to keep coming down. I was just trying to catch this last push down here to hit full TP, but a stupid move by me because I didn't even follow my own rules. So this small move right here, I ended up getting out down here, but I know Sam got stuck in his trade, so he literally caught this and it literally reversed on him. So that's why I wouldn't enter a trade. Sorry guys, I wouldn't enter a trade at a random time, because right here, oh, like that even happened right there. So as it was coming down, price just shot up again. And that's like one thing that you want to get caught in, because if you did catch this trade right here, and then you caught it from the swing right here, you would have hit TP already. So technically you'd be out of the trade and you'll be waiting for another retracement before entering. But yeah, if you do see a trade, I would enter, but I would also be careful because US market's already closed. So since the US market's closed for the holiday weekend, you're not going to see very much movement. And the last thing you want is to be caught in this trade over the weekend, and then you open your account on Sunday and price is way up here. So personally, I wouldn't take the risk. Like, what's the point of the risk? You're going to catch a few pips. It's just, personally, I don't think it's worth it. But I mean, if you want to take it, you could scalp it. But you can already see right here. So you can see, these candles are moving like 800 pips each. So like 800, 700, 800, 700, 800, 600 pips. Right here, you can see these candles started to die down. So once the swap ended right here, you can see each candle only moved like about 100 pips, 100, 200 max. So the problem is, I think, Josh, you're trading on CoinEx. You're going to have to cover the spread. So I think your spread's like 300. It's going to be literally impossible for you to get out of this trade with profit. You're going to be negative for maybe a couple hours because it's barely going to move. It's going to range somewhere in between here. It's just going to keep ranging around. So the thing is, you're going to have to cover the spread, and then you're going to have at least some profit to get out because you're going to have to pay commission. So personally, my perspective, I wouldn't take the trade. It's just not worth the risk for like a few bucks, you know? But yeah, let's see if there's any other questions. I think we're all done with that. Let's see. Awab is, and got you also, Shawn, on your US 30 signal calls, do you enter on the 10-minute always? Yeah, Awab, for the daily US 30 calls, I use the daily US 30 trading strategy. So I think you have the indicators now. So if you want to watch the videos explaining how I take that specific trade, it's only, for me personally, I only use it on the 10-minute. I know some other people use it on the 5-minute or the 15-minute, but if you want the high accuracy wins that I've been making for every single trade, you would have to trade it on the 10-minute, because that's what it's based on, and that's what I've tested it on. I know it does work on other time frames too, but I personally don't use it. So let me, we can even look. So let's go to the 5-minute. And then what I'm going to do is I'm going to mark the New York Stock Exchange open. So the New York Stock Exchange open right here at 6:30. You actually would have gotten a higher entry right here. So if you're trading on the 5-minute, you would have gotten in way up here. So if you got in way up here, you would have locked in an extra 1,200 pips. So, you know, the thing is, you'll get an earlier entry, but with that earlier entry comes more risk because you're trading on the lower time frame. The thing is, when you're trading on the lower time frame, you know, the signals aren't as accurate. You can see there's a ton of signals here going back and forth, you know, compared to like say the 4-hour. The 4-hour, there is a huge gap in between each signal. See, there's like days in between each signal, and that's how they're highly accurate. Like this right here, if you took the, you know, this entry right here using the K² pivot strategy, you could have locked in like 20,000 pips. You know, comparing it to the 5-minute, you're going to get a ton of signals, and a lot of these are going to be false signals because the thing is, it's going to be detecting momentum swings on the lower time frame, and obviously you're going to get a lot more momentum swings as price, you know, spikes around. You know, comparing that to the 15, you can see they're a little more spread out here. Each signal probably has about a couple hours in between. So that would give you some more accuracy. But let's look at, so yeah, so the 10-minute, we entered right over here. That's pretty much the one that we took for today. And then for the 15-minute, it looks like it would have had the same exact entry. So just depending on you know, your preference. If you want to take high risk trades, you can go on the 5-minute. But you might get stuck in like some riskier trades. Let me see the one from yesterday. So this is the one from yesterday. Let's see when 6:30 was. 6:30 was right over here. So yeah, even on yesterday, you would have gotten in way higher. So if you got in right here, you probably would have hit full TP because the entry would have been right here. And yeah, you would have had an extra 1,600 pips. So I'm just going to go over the strategy real quick for the new people here, because I know there's a couple people here that don't know the strategy. I'm just going to run through it super quick. Some people are asking me how to apply it. So the way that we apply this strategy is, which you can use on the 5-minute, 10-minute, or 15-minute. Personally, I recommend the 10-minute, but you guys can use it on, you know, whatever time frame you guys like. I know other people in the group use it on the lower time frames too, which also works. So this is going to be the daily K² US 30 strategy. It's real simple. It's just 2 requirements. Look for entries after the New York Stock Exchange open, which is going to be 6:30 a.m. Pacific Daylight Savings Time. And then next, you're going to take the first valid K² signal. And then, yeah, pretty much number 3, enter on open of the following candle. So I'm just going to run through it super quick. I know most of you guys know it, but there's a few people in here that are new. So that's pretty much it. That's first the requirement. So the first requirement is that we look for entries after the New York Stock Exchange open at 6:30 a.m., which would be right here. Pacific Daylight Savings Time, which is my time. If you're on the East Coast, that'd be 9:30, I'm assuming. Yeah, 3 hours ahead. And then if you want to look at your other time zones, you can always just use a time zone converter. But pretty much you're going to look for the entries after the New York Stock Exchange opens. Next, you're going to take the first valid K2 signal. So a valid K2 signal would be a sell signal with a red bearish candle. This would be a valid buy signal with a green bullish candle. An example of a invalid signal would be, let's see if we can find them here. Okay, so this would be an example of an invalid signal. So it would be invalid if it was a sell signal with a green bullish candle. Obviously, they have to match. So this would be invalid as well because it's a sell signal with a green bullish candle. This would be invalid because it's a buy signal with a red bearish candle. This would be valid, this would be valid, this would be valid, and this would be valid. So getting that out of the way, let's see, what was that? Yeah, so getting that out of the way, we've met the first two requirements. So first, we want to look for entries after the New York Stock Exchange opens at 6:30 a.m. Pacific Daylight Savings Time. We started looking for entries right here. Let me just back this up. So first entry is met. Next entry, you want to take the first valid K2 signal that appears after that time. So as you can see right here, the New York Stock Exchange opened right here, and here's the first valid K2 signal. So once we get those two, we could enter on the open of the following candle. So we enter right here. You want to put your stop loss at the previous swing, which is right here. We can just round that to 1500. You don't need to round it, but personally, I just like to round it to make it easier. And then you let the trade run. And then you can see right there, hit profit target. So easy money, guys. You're going to hit profit target for 1500 pips. And then if you were trading it on, so let's see, 1 plus 1500 pip profit. And then depending on your broker, you know, some brokers will value US 30 as, you know, $1 per pip. So if you're trading on, I think AvaTrade, so AvaTrade would equal 0.1 is $1 per pip. So if you have plus 1500 pips, that would be equivalent to $1,500. So it just really depends on your broker. If you're trading on Hugo's Way, it's going to be like 1.01 is going to be 10 cents per pip. So even with that win, you'd still have, you know, 1500 plus 1500 pips would equal 150 bucks profit. So it just really depends on which broker you use. I mean, there's no better broker. I mean, I think AvaTrade's better. If you could find a regulated broker that works with your country, then, you know, obviously I'd go with the regulated. But in the U.S., we're kind of limited, so, you know, a lot of us trade on Hugo's Way, which is fine if you're trading just during the, you know, the trading hours. But if you trade after hours, then good luck, guys. And they'll definitely screw with you once it comes to late night hours. Looks like Aaron's here. Aaron, can you hear me?
Nope.
Oh yeah, Aaron can't hear anything. All right, let's see. All right, cool. So we have one question from N. It's asking options on Euro USD. So let's open Euro USD real quick. I'm not Euro USD. He's asking about gold. XAU USD. Let's head to gold real quick. I'm gonna put this back to where it was. I'm gonna turn on the pivots real quick just to see. Yeah, so US 30 still looks fine. Obviously volatility died down. It's probably dead for gold too. So let me open gold real quick. Let's see, I'll max this out. Zoom out of this. So let's see if I can find some zones on here. Doesn't really look like there's. So there's no zones here. Let me go on the higher time frame. Actually, there's a lot of zones right here. It's in a full zoned area actually. Yeah, personally, I wouldn't trade gold right now because it's in a zoned area. So it's pretty much going to consolidate until it breaks out of the zone. I'm going to draw my zone right here. And the problem is there's lower zones right here too. So it's got a long way to go before it breaks out. So let me go back to the 4-hour. Turn the pivots. So technically, it's in an uptrend right now. Yeah, technically, it's in a pretty strong uptrend for the most part. So it's been in an uptrend since June 5th. So we start from down here. It's been an uptrend for 27 days. So the thing with gold is, well, if you guys aren't familiar with the K2 pivots indicator, pretty much when price is above the indicator, this would be the K2 pivots right here. And if price is above it and then the K2 pivots are aligned, angling in one certain direction, and then they're spread out like they are right here. Let's hide stuff. Yeah, so if they're spread out like they are right here, obviously it's a strong uptrend. Once it gets tighter like it is right here, it's in consolidation. So as you can see right here, it's still in an uptrend. You can see that the only problem is that the yellow and green pivots are kind of jumbled up right there. That'd be level 1, level 2. But that's fine because those are the weakest pivots. Those are meant to get tested time after time. You can see right here, price comes up, it tests it 1, 2, 3, 4, and then like 20 times right here. So pretty much that's fine that they're crossing. It gets more risky when the pivots come down lower. So let me put the zones back up. So if you're trading gold, it's still above all 4 pivots. So the thing is, what you want to anticipate before entering this trade, or if you're already in the trade, is you want to wait for price to break above the zone right here, because this would confirm that it's broken out of the zone and it's not allowing the bears to take over. So if you can see right here, so this is an example. Price was stuck in these zones earlier in the past, but once price broke the zone, it shot up to the next zone and then shot up to the next zone, and then it kept shooting up until it rejected from here, came back down, shot up. It wasn't able to pass the zone, and then it came back down. So it looks like here it's making a third attempt to shoot back up. So I think if price comes up and creates a higher high right here, then I think it'll continue on upwards. So this would be good. I mean, especially since, the COVID news came out and the COVID breakouts are just getting worse. Gold's going to go up if fundamentals follow through. So, that'd be good. 1 second, guys. I'll be right back. Hey, guys, sorry. I'll be right back. I got to do something. Sorry guys, 1 second. My dog just ran out, so I had to go get him. I'll be right back. Give me about 1 minute. I'm just gonna wash my hands real quick. All right, guys, I'm back. So let's go back to gold. So we were looking at gold earlier. Pretty much what I was saying was gold would be a good buy entry if price was to break above this zone right here, because it would pretty much follow what happened over here. So you can see down here, price broke the zone right here, and then it shot up to the next zone, and it shot up to the next zone, and then it shot up to this area where it rejected. Right here, it tried to break outside the zone, but then it retraced back. I think this was because of news this morning. So we had, yeah. So this drop was due to the unemployment data. The data was actually better than what was anticipated. And that's why gold went down, because following fundamentals, generally, if the US economy is doing well, then gold will move the opposite way. So if, you know, right here, it forecasted that there was going to be a 3,000 unemployment rate. Over here, it was actually 2,300. So in that situation, the US dollar gained strength, and then gold went down. And then right here, this is when the COVID news came out saying that, there's a ton of new cases, and that's why it shot back up. And that's why I anticipate price to continue on upwards. It just really depends on, you know, how price is going to move by the time market reopens, because the market's closed for the July holiday. So in that situation right there, price is not going to move for like the next 2 days, because tomorrow the US market's closed, and then I think the European market's only open 50%. Let me go to the news real quick. Yeah, so it looks like the US financial markets are completely shut down for the day or for the week. And tomorrow, the European markets are semi-closed except for London. So we might see some movement in about, I guess, 7 hours once London opens up. Otherwise, I don't know if the Asia market's open fully. It doesn't seem like it because it's not really moving. So we probably just wait until probably Sunday for something to actually happen. But yeah, that's pretty much gold. If you guys have any other questions, feel free to put them in the Q&A. Looks like we pretty much went through everything for the most part right now. So yeah, if you guys have any questions, feel free to put them in the Q&A. Otherwise, I'll just look at what we currently have open, and then I'll analyze them for how they are moving at the moment. So let's see, we still have US 30 open right here. It's looking good. Like I mentioned earlier, I'm not sure if it hit full TP for everyone, but it looks like it's still coming down. It's an overall very strong downtrend right here. You can tell from the K2 pivots. And then we did have a sell signal right here. So I think it's still coming down. The only problem is, like I said, the US market's closed, and US 30 is a US asset. So probably not going to see too much movement there for the next 2 days. Let's see what else we got here. So we have minimize that, maximize this. I'll go back to US 30 a little later once we get closer to 7 o'clock, like in 2 hours, because it's probably not going to move until then. So we had this odd CAD that Actually, I didn't give this call out. I was thinking about giving this call out right here for a sell. Even though it was going against the trend, it looks like it did push up, pretty nicely. I mean, push down. I was thinking about entering a buy right here, but it didn't break above the zone. So this would qualify for an entry using the K2SR zone trading strategy. So that's why we didn't take a buy there. But if we took the sell here at 10 a.m., it could have been pretty decent. Let's see what we have here. I know a lot of you guys are still in this odd CHF. Personally, if you guys get in profit, I would just exit because this position is still open over here, actually. And this has been going on since June 22nd. So I told a lot of people to get out here, and a lot of people got out last week in this area. Again, price shot up in profit right here. So there's another opportunity to exit this trade once price shot up over here on the 1st. So if you guys get back in profit, I would just exit this trade because it's not really moving. Although we did switch to an uptrend, personally, this pair is literally not moving at all. It's literally just bouncing around. So tomorrow, if it shoots back up, you had a couple opportunities here to exit. Each of these candles are 4-hour candles. So you would have had, 4 hours, 8 hours, 10 hours. You literally had an entire day to get out right here. So tomorrow, if it shoots back up, I recommend you just exit. It's not really worth holding anymore. So I personally wouldn't hold it. Same with AUD/USD. I think AUD/USD hit TP1 actually. Yeah, it did. So it hit TP1 a long time ago. So if you guys still have this open, you've been holding on for it for like way too long. We entered this trade on the 12th. So it's about 2-3 weeks ago. And a lot of people got out when it hit TP1, or people got out when it came back down over here, or even in this area. So if I pull this down here, it's been in profit in and out since we entered the trade. But most people already got out in profit. So personally, I would just get out if you guys have the opportunity. It's just like, it's the same with all the other odd pairs. They're just not really moving very much. Let's go to our next. I think we only have one other pair that's active right now. Our other pair that's active is the Euro odd. And this is actually pretty heavy in profit. So this position also hit TP1, I guess at some point yesterday on the 1st. If not yesterday, it hit TP1 over here. But yeah, it's in profit now. So I would, if you're still in this trade, you should have exited this trade at TP1. So let me see when TP1 was actually hit. Let's go to Euro odd. So Euro odd hit TP1 on the 17th. So it hit TP1 like 2 weeks ago. So in that situation, I'll check US 30 right now. So in that situation, when CP1 was hit on the 17th right here, what I always recommend is once it hits CP1, move your stop loss at CP1 so that you can guarantee those profits. If you guys missed that opportunity, we had another opportunity over here to exit, another opportunity right here, and then again today on the 2nd at 10 o'clock a.m. So if you guys still have this open, I personally would just exit it right now manually. Unless you want to hang on to it, it's your preference whether you want to hang on to it and hope that it comes down further. Otherwise, you can see from our other pairs, the AUD pairs are just not moving. So I wouldn't take that risk hanging on to a trade that has no volatility. It moved a little bit here, but not very much to reach any of our points that we're aiming for. So yeah, if you still have odd CHF, odd USD, or Euro odd, I would exit those in profit when you get a chance. Otherwise, that's pretty much all we have active right now. Let me look at the alerts. We have US 30 alerts right here. That's just from the 10-minute. Yeah, US 30 starting to retrace right here. Let me see if Josh is still here. Yeah, Josh is still here. Yeah, Josh. So if this closes with a buy signal, then you can probably wait for the next sell signal to make an entry. Otherwise, I wouldn't just enter at random because, like we discussed earlier, whenever you do that, it ends up retracing. So that's a good thing you didn't enter when we discussed it over here. Because obviously, like I mentioned, if you try to enter right here, it would just shoot back up. And that's exactly what happened right here. So yeah, just wait for the sell signal, and then that would be your catalyst to enter the trade. Let's see. So we don't have any other questions. So if you guys have any questions, feel free to toss them out. There's nothing to really look at here. I already analyzed everything that we have active. I can see if there's any other entries that are going to be available, but it doesn't really seem like it because it seems like the market's pretty much dead since everything's closed for the holiday weekend. So let me just scan around. I'll just take my time scanning through. If we don't have any questions, you might just have to end this earlier. But yeah, if you guys have questions, we can keep going as long as you guys want. So one more question from Josh. Josh said, I have another question. A lot of us don't have a 10-minute trading view chart. I know you said the 5-minute was good. 10-minute, of course, is better. Yeah, in that situation, then you can use either the 5-minute or the 15-minute, depending on how accurate you want the trades to be. So like I mentioned earlier, we could go to the 5-minute. Yeah, accuracy. So if you want accuracy, well, if you're scalping, obviously you're going to want to use the 5-minute because you want to take, as many entries as possible. But if you want accuracy, then obviously the 15-minute is going to be better. But technically, it'll be accurate, but it's going to be a late entry. That's the thing, because you guys have to remember that every 15-minute candle is actually 3 5-minute candles. So if the signal came at the beginning of this, like say this sell signal right here, I think this was the same entry from today. So let me just mark the 6:30 mark over here. Let's see, I'm gonna put a vertical line. There we go. So 6:30 right over here. So as you can see right here, if you're applying the daily K2, the K2 daily US 30 strategy, pretty much right here would be the entry. So if we mark this up right here, you can see that the parameters would be, I think the parameters lined up very well with the 10-minute. So this is an example showing that the strategy works fine on the 15-minute. So right here is the 15-minute. Let's go to the 10-minute. So the 10-minute is right there. It looks exactly the same. So this is actually pretty fine. But let's go to the 5-minute. So if you traded on the 5-minute, you would have entered up here. So you would have had a head start on entering this trade. But the con of that is that if this isn't a good signal and it's just a random just shoot of momentum, then you would have gotten in on the wrong candle. Let me see if there's, I'm gonna try to find an entry where it doesn't work that well. I think it worked yesterday too. So let me go to the 5. I'll start on the 15. I'll go from top down, just so that we can have a better visualization as to how the entries work. So right here, we'll go to 6:30. This is the 6:30 market open right there. Again, right here, this would be the entry. Have a sell position right here. Stop loss at previous swing. We'll mark that 1800, I guess. All right, so right here on the 15-minute, obviously it hit TP right there. Let's go to the 10-minute, see where the entry was. See that the 10-minute entry was later. So the 15-minute was actually more beneficial for this one. And then let's go to the 5-minute. The 5-minute you would have gotten way earlier. So the 5-minute would have been superior here. So as you can see, it's a huge differential. If you got in at the 5-minute, you would have locked in way more pips. If you got in at the 15-minute, you'd have been pretty prime entry as well. But if you entered the 10-minute, it would have been a late entry. So you would have gotten in 400 pips later. And those 400 pips could be a game changer, whether you win a trade or not. And that's why I always advise to minimize your risk and adjust your stop loss when you reach TP1, because in the situation right here, if TP was way down here and you had TP1 halfway, you could have locked in half the profits. But yeah, there goes an example of the huge differential. This is a big difference because that's 400 pips that you lost out on, depending on where you enter. Because yeah, like I said, the 10-minute. I know for this one we only hit TP1, but it looks like if we entered on the 15-minute, it would have been a perfect entry right there. Or even on the 5-minute, if we use the 5-minute. super prime entry right there, way up here. Let's just look at one more example, or actually, I don't think we have another one, right? Oh, the first. Okay, so we'll look at the first real quick. Just one last example, just to, because I'm trying to look for a bad trade so we can see, which one works best. Okay, so right here, 630. We'll start at 15. Right here on the first. Actually, looks like a great trade right there. I don't know if we took this one. I think I sent it out, but we didn't take it. Okay, so entries right here. We'll just put 1700, round it. So on the 15-minute, entry would have been right there. Perfect, full TP. Sorry, 10-minute. Oh, what did I just do? Just deleted the 10-minute off my thing. All right, so I had the 10-minute on there. Okay, so yeah, the 10-minute, again, right here, late entry. So 15-minute would have been prime, right in the middle. If we entered the 10-minute, which we did, we would have missed out. Same thing, 400 pips. Oh no, actually, this is the same entry. What am I talking about? Sorry, guys. I was looking at the wrong one. The 30th. Okay, this is what. But this was a heavy news day, so this, I don't think this would even count. Or would it? Let's see. So 630 is right here. The entry would have been right here. First entry, buy. Stop loss at the previous swing right here, about 2,000 pips. Yeah, we didn't take this trade because I think that the Fed was speaking. So right here, obviously a TP, great entry as usual on the 15-minute. On the 10-minute, let's see where it looks like, where it's located. So on the 10-minute, actually, we would have had a better entry on the 10-minute way down here. So this is what I mean. See, overall, I think the 10-minute works best. Right here, if we got in way down here, we have an entry of an extra 800 to 900 pips, about 820 pips. That's huge. That's a lot of pips to give up if you trade on the later time frames. So the 5-minute. Let's see, the 5-minute looks like even better. Or actually, the 5-minute kind of matches up with the 10. So you can see that between the 5, 10, and 15, they fluctuate just a little bit, but sometimes, sometimes the 5 matches up with the 15, sometimes the 5 matches up with the 10. It just really depends on, market conditions or however anything's working. I mean, if you really want to, here's the thing, if you really want to match them up, you can always just put up 3 charts side by side by side. So you can do 5-minute, 10-minute, and 15-minute. But personally, I would just stick to one, because once you do that, you start to confuse yourself. Let's see, Josh's question. And minute 1500 between. Yeah, so the minimal stop loss is going to be 1500 because you want some cushion. So the thing is right here, I mean, obviously the stop loss would have been down here, but if you put it too close during US market, volatility is super high. So you can see right here, this volatility is crazy. So if you had, I mean, obviously you're going to put it the previous swing, but if you were putting your stop loss at like 1,000, odds of you getting stopped out are very likely. Because the problem is if you're trading on a, whatever broker you're using, I know Hugo's way, the normal spread is like 370. That's like all day, like 340, 370. You would have been screwed because, you have to cover that spread. Plus you would have to cover, the drawdown. So instead of missing out on what, on 1,000 pips, you'd be literally your drawdown would be like 700 max because you'd already come in at a 300 pip loss. So that's why I always recommend 1,500. But yeah, that's pretty much it for US 30. So Lewis is asking, can you set alerts for US 30 for a sell or buy signal? Yeah, so that's pretty much the pop-up that's been coming up like on my chart. You can see right here, I had a buy signal right here. These are pretty much all my alerts, US 30 alerts. And then I just have alerts when I hit TPs. So I only turn this on. I'm gonna turn it off right now because I'm not even using it. So TP. Yeah, there's no stop loss there. Clear hit TP. I'm gonna turn it off. So if you want to set an alert for US 30, you just go to you just click on alert up here, and then you click on this condition right here. Change that to K2TS, which is the momentum indicator. And then you change this right here. You can put buy or sell, but personally, I just put signal fired. It'll send for both. So it'll send you whenever any signal comes up. And generally what I like to do is if I'm trading on a lower time frame, I want to know when the candle closes. So I'll set it to once per close. I mean, I'll put it once per bar so that every time it appears per bar, it'll give me an alert. But if I'm trading on a higher time frame, I don't want the alert to keep popping up. So I'll just put once per bar close, and you'll only get an alert if it closes with the signal. Once per bar is it'll give you an alert if it shows up and then disappears. So just depending on your preference, if you want to wait for a valid signal, then you use once per bar close. If you just want to be notified every time a signal appears, like if you're trying to catch a move, like we take the daily trade, obviously you want to know when every signal is appearing, you can put once per bar close. And if you have premium, you can put open-ended. You said you're on Pro Plus, so you're gonna have to put a date. You can only set alerts, I think, three or 6 months out. So once those 3 or 6 months ends, you just add another one. But if you're on premium, you can use open-ended. So I never need to update mine. And then you have other options here too. You have like, if you want to be notified on your TradingView phone app, if you want to pop up an email, webhook, this is a little advanced. I use this sometimes if I want, my platform to take the trade for me. Like if I want to do automated trading, you would have to, purchase some type of webhook to send your trades to your phone or, whatever broker you're using. And yeah, that's pretty much it for the alerts. Let's see. Mike said I'm in a group and they called SPXL. So let me open up S&P real quick. So S&P, I forgot when I called this buy, but it looks like it hit TP. Whoever I analyzed this for, I think yesterday. Or no, it was probably during the last webinar because I don't trade S&P, so I wouldn't have this open. Yeah, it does look like a sell junior. So Mike, check this out. Let's close this. I mean, technically, let me go on the higher time frame because these lower time frames aren't very. It's kind of iffy because depending on what that group is looking at, if they're looking at it on the higher time frame, it's still in an uptrend because it's above the pivots. You can see right here, price usually rides above these pivots. The problem here is that it came up, rejected off this resistance, and then came down. But what could happen here is it already rejected off the pivot right here, right? So what could happen here is it could shoot back up, or it could come back down and retest the pivot, or retest the farther pivot down here. It could literally go either way. So this is the 4-hour chart. I don't know if they're trading long term or intraday or scalping. Depending on what type of trade they're looking at, the analysis will be 100% different. So the 4-hour, it looks like it's trending up still. Long term, it's going to go up. 2-hour, it's still coming up too, but it looks like it's coming down to test the second level. Let's go to the 1-hour. Same situation here. It was in a strong uptrend. It rejected off this resistance, and then it's coming down. So it might be coming down short term, but I think long term it'll continue up because on the 4-hour, obviously it's still in the very strong uptrend. Let's go back to the 30-minute. 30-minute looks like it's crossing right here. So it might come down a little further, test this K2 pivot right here. So many pips is that? About 50 pips. It's not very much. So depending on if they're scalping or if they're trading long term, this could either reject because it's already been rejecting off these pivots right here. It came down 1, 2, 3 rejections. It could shoot back up. or it could come down further and test this pivot before it either shoots back up or comes down further and ends up testing, the next zone. This trade could literally go in either direction right now. But it looks like it might be coming down for a little bit because the thing is, we have a false buy signal right here. So the next signal is going to have to be a sell signal. So if you have a sell signal, it's going to push down a little further. On the 1 hour, same situation right here. We already have a buy. The next signal, if we get a strong bearish candle, it's going to be a sell signal. It's probably going to push down like it did right here. So you can see right here, Mike, price came up, and then we had a sell signal. It came down, and it tested the third pivot. That's what might happen here. It looks like it came up, came down, and it might come down further and test, the level 3 or the level 4 pivot. So it can come down, test that pivot, or come down, test this pivot before, either shooting back up or continuing downwards. It's really, there's no direct answer for that right now until you see something. But also, like I mentioned earlier, the U.S. market's closed. The S&P is a U.S. index, so we're probably not going to see too much movement. All right, let's see. So you got TP1 at, let's see, horizontal line. So TP is at 3124. Oh yeah, no, you guys are fine. That's actually really close. So it's pretty much lining up with the pivot. So the thing is, if they're trading on the, let's go on lower time frame, 30-minute, oh, that's actually really far. That's kind of a stretch, depending on how they're trading. Because the thing is, let's look at actually no, it might come down because US 30 is coming down, and it usually moves similar to US 30, but US 30 is pushing back up. So yeah, this is a little iffy. You can see right here they're kind of similar. You can see the pivots are both angling down the same direction, same movement up, shot up right here too. Went up right here, went up right here, came back down, and then out sideways. So it might come down actually. I think it should be able to come down. But I mean, who knows? We don't really know because the problem with the market right now is that since there's no volatility, price could really go either way. If a big trader wants to come in and push the market, like an institution or a market maker, they can literally push it up or they can push it down. It's really up to whoever has the power to move the market. Let's look at the here. Let me see. I'm gonna look at the IG sentiment. So US 30 IG sentiment. So it looks like the market is pretty split right now. It looks like 54% of people are short. So the market is literally split. There's no specific direction of where the majority of traders are. So this just means that 54% of the traders are short, and then 56% of the traders are long. So it's literally at a middle ground right now. It could literally go either way. So, I mean, good luck if you're in that trade. It looks like it should come down because I kind of hope it does come down because the thing is we still have our US 30 trade open. Well, I mean, I don't. And I don't think anyone else, like majority of people don't, but we still want this to come down so we can hit full TP for the people that weren't able to get out earlier. Whoever had a tight spread and stuff like that. But yeah, that's about it for the questions. If you guys have any other questions, feel free to toss them out. Otherwise we might just have to call this session a little early because there's not really much to look at right now with the market so slow. But like I said, I'm going to look at the other pairs, and I'm just going to see if there's anything to enter. If not, I mean, there's not really much to cover because there isn't any trades running. So our odd CHF is coming back up. Like I mentioned earlier, if you guys still have this, If you guys still have this active, then I would recommend that you close it and profit when you can. JPY, NZD. This USD is just up here. All right, we have one question. So we have one question from anonymous attendees asking if I can explain the pivots. So I'll explain the pivots right here. Let's read this. Like this. And I'll take this off the chart. All right, so now we just have the pivots. All right, so pretty much the way that the pivots work are that there's two ways to use the pivots. You can use the pivots to determine the trend, and you could use the pivots to determine rejection points. So as you can see right here, when price is above all four pivots, you can see right here the K2 pivots come with 4 different levels. Level 1 is green, level 2 is yellow, level 3 is orange, and level 4 is red. Pretty much when those are just degrees of pivot. So if it hits pivot 1, you know, it's a very light, it's a light level. It's not very strong. You know, yellow would be kind of moderate, or orange would be a little bit more intermediate. Once it passes the red pivot, then odds are price is likely to reverse in the opposite direction. You can see right here, price came up and it crossed all 4 pivots and it kind of went upwards. It came down right here and then it went downwards. It came up right here and then it went up for a pretty long time. You know, it didn't pass the red pivot for a while, and then once it passed it right here, it was short term. But if you see price above the pivot and the pivots are angling in the same direction and they're pretty spread out like they are right here, you can see that there's a lot of space in between them. You know, you can basically predict that price is going to trend up for some time. So as you can see right here, you know, it's easy to identify the trends. And the other way to use it is to determine the rejection points. So you can see here price was in an uptrend, and as it comes down for a retracement, you can see that price came down and then rejected off the level 2 pivot right here. Well, it technically rejected in between pivot 2 and pivot 3, and then price shot back up. Again, right here, price came down, rejected off pivot 2, 1, 2, 3, 4, and then it came back down right here, tested pivot number 4, and then it shot up pretty strong. The way to use this using the K2 strategy, which is explained in the course if you have access to it, is we tie this indicator with the momentum indicator. So if you're not familiar with the K2 momentum indicator, basically what it does is it directs you to the direction of momentum for each candle. So if we have a sell signal right here, but the problem with this is that we have a sell signal, but it's going against the trend. We know it's trending up because price is above the pivots and the pivots are pretty spread out. So in this situation right here, if you get an opposite signal, this is generally just going to be considered a retracement candle. It's not a very strong candle that's going to keep pushing that direction. Yeah, otherwise, you can see right here, we have a buy signal. A buy signal indicates that price is going to be continuing upwards. As you can see right here, the direction is going upwards because we have the momentum of a buy signal. Also, the trend is showing a strong uptrend. So if you tie that together, if you tie the trend with momentum, obviously price is going to continue in that direction. As you can see right there. See, you can see right here, we got a buy signal and the trend was trending upwards very strong because these are pretty spread out. And then it was a nice move up. If you measure that, entry right here would push for 13,000 pips or micro pips. So a lot of people get confused with that. You know, US 30 is generally measured by micro pips because it's traded by the E-mini, unless you're trading a huge account. If you're trading a huge account like we do with FTMO, you know, it'll be measured by the standard pip. But if you're trading on Hugo's Way, IC Markets, you know, any normal unregulated broker, they go by micro pips because obviously, you know, you're trading for the lesser amount. If you're trading the future, then you're going to trade the standard pip, obviously, and that's why it costs more to trade, you know, the real future opposed to trading, you know, US 30, the Forex pair. Like I mentioned earlier, if you take momentum in the specific direction of the trend, generally it pushes up even further. Right here, like I mentioned, momentum upwards. it moves with the trend. Again, right here we have a sell signal, but it's against the trend. So it came down slightly before it rejected off and then came back up and corrected. Again, right here we have a buy signal, and then it continued on with the trend. So let me explain the strategy to you if you don't know it. This is going to be the K2 pivot strategy. And this is really simple as well. So the K2 pivot strategy is going to be one, you're going to identify the trend. Next, you're going to identify a pullback. Next, identify a rejection, or pullback, retracement, depending on what you want to call it, off K2 pivot zone. K2 pivot zone is anywhere within the K2 pivots. It doesn't have to reject directly off a K2 pivot. It just needs to reject off, any area in here. And then lastly, identify valid K2 signal. And then once you have all those, you can enter on open a falling candle. Make it smaller. All right, so going over the requirements. So first, you want to, let's see. So we can start from, let's just rewind. Select this candle right here, because this would be a good example. Oh, no, what's going on? Let's pull this down right here. All right, so going over the requirements. First, you want to identify the trend. Like I mentioned earlier, you could identify the trend if price is above the K2 pivots, and if the pivots are pretty spread out like they are right here. You can see you have 1, 2, 3, and 4. Again, right here, they're pretty spread out. We have green, yellow, orange, and red. They're pretty spread out. So right here, we have identified a strong trend upwards. Next, you want to identify a pullback or a retracement. So you can see right here, price was trending up, came down, trending up again right here, came down again right here. So this would be considered a retracement because price is going against the trend. So price retraced right here. Lastly, you want to identify a rejection off the K2 pivot zone. So requirement 1, we've identified the trend. Requirement 2, we've identified a retracement downwards. Lastly, you want to identify a rejection off the K2 pivot zone. We have a rejection right here. It's a strong, nice bottom wick, rejecting from the bottom, and then it continues back up to correct. Lastly, you want to identify a valid K2 signal. Right here, we have a valid buy signal. And this is valid because it's a buy signal with a green bullish candle. Right here's a valid sell signal because it's a sell signal with a red bearish candle. I don't think there's any invalid signals here that I can see, but it would be invalid if it was a sell, like right here. So right here, we have a sell signal, but it's a green bullish candle. Since these are opposite and they don't match, that would be invalid. Similar if it happened with a buy signal. So if you had a buy signal and it was a red bearish candle, then that would be invalid too. But if they match green and green, valid. Red and red, valid. So let's go back to here. Right here, it's green and green, so it's valid. We've met all 4 requirements. We've identified the trend, it's trending upwards. We've identified a pullback retracement. Right here, you can see price is pulled back and retraced. Lastly, we want to identify a rejection. We identify this rejection, and once we get a valid K2 signal like we did right here, we can enter on the open of the falling candle. So let's enter a long position right here. And then when placing your stop loss, generally I always recommend to place your stop loss at the previous swing, but I know other people like to put it either at one of the 2 last pivots. So pivot level 3 is right here. You can put it there for 2,000 pips, or pivot level 4 right here. You can put it here for 3,000 pips. If you want to follow my instructions, you would put it at the previous swing right here for about 3,500 pips. So 3,500 pips right there. If you let it run, profit target. So within that time frame, you would have made 3,500 pips. Let's look for the next entry. All right, so let's just go over the requirements again. We want to identify a strong trend. Right here, similar to how it was down here, the pivots are angling upwards and they're pretty spread out. We have level 1, 2, 3, and 4. We've identified a strong uptrend. Next, you want to identify a retracement pullback. Right here, you can see price reached a high, and then it retraced down this direction right here. So this would be the retracement. Lastly, you want to identify a rejection off the K2 pivot zone. You can see right here, price hit a low and rejected off this zone 1, 2, 3 times. So this is a nice rejection point. So once we have those three, like I mentioned earlier, we just want to identify a valid K2 signal like we did right here in order to make an entry. So let's keep pushing forward. Okay, so right there we have a valid K2 signal because it's a buy signal with a green candle. Green and green makes it valid. So once we've met all those requirements, we can enter on the open of the following candle like we did previously. Enter right here. Like I mentioned, you can put your stop loss at the previous swing down here, level 3 or level 4. Like I said, I prefer to put it at the previous swing. So this would be the previous swing for 5,500 pips. We can just round that to 5,600. Let it run. And there you go, profit target again, guys. It's pretty simple, and it works on all time frames. So if you want to swing trade, obviously you can trade it on the 4 hour and up. So if you want to do 4 hour, you can do that. If you want to trade intraday, I always recommend 30-minute or 1 hour. So if we go on the 30-minute, same situation again right here. What's the requirements at? So pretty much same requirements again, like as earlier. So we identified the trend. It's trending up, obviously. We identified a pullback right here. Price shot up, rejected right here. I mean, not rejected, retraced right here. And then third requirement, identify a rejection. You can see the low is established right here. We have a strong rejection. And lastly, you want to identify a valid K2 signal. Right here, we have a valid buy signal because it's green and green. And then you can enter a long position right there. Like mentioned earlier, you can put the stop loss at the previous swing. It could be either right here, level 3 or level 4. Depending on how big of a move you want on the lower time frames, I generally like to put it at the lowest level because you want some cushion for you to for your trade to breathe, especially if you're trading US 30. So that'd be about 2,000 pips. Let that run. Let's see, there you go, TP hit. So as you can see, worked on the 4 hour, worked on the 30-minute. We could go even lower if you want to trade. So we did swing trading, we did intraday, and then now we can do scalping. So we go to the 10-minute. The scalping works on the 5-minute, 10-minute, and 15-minute charts. So on the 10-minute, same situation here. You want to identify the, I can rewind it over here. Identify the trend again. Right here, it's a strong uptrend. Identify a pullback retracement. Price shot up, retrace down to here. Third requirement, identify rejection. There's a rejection point right here because price came down, established a low, and rejected off the pivot zone. Lastly, identify a valid K2 signal. We have a valid K2 signal here. It's a buy signal with a green candle. So we can enter a long position right there. Stop loss would either be, I wouldn't put it here because it's too close. It's only 200 pips. So you can put it down to level 3, which is about 500 pips, or level 4, which is about 700 pips. No reminder, it works on all assets. So I'll show you another one after. I just showed US 30 because in order to trade this, you need a pair that moves fast because it's based on momentum. The thing is with the Forex market right now is that it's just moving too slow. So the thing is, even if you enter this, you'd be hanging on to that trade for a long time. But I'll show you another pair after this. So there you see US 30 hit profit target. Delete that. And I'll show you another one on FX pair. So let's go to FX. You kind of have to use it on a pair that actually moves. You can't use it on a dead pair that's not really moving. So we can use something like GJ. So GJ right here. So we go on the 4 hour just to show you the same thing I did earlier. I don't think we have any GJ trades open, so I'll just, or I could leave this open right here. So pretty much, let's go to an area where there's not too many zones. Because the problem with trading where the zones are is Yeah, the problem with trading with the zones is because you can see rejection points. So the thing is, you're not going to enter trades. Like right here, we have a valid entry, but you probably wouldn't take this because it corrected off a zone. But if we did take it, so let's see, I'm going to go back down here. Yeah, so if you want to enter this trade, this would be a risky trade just because of the zones. But if I delete these zones, this would fall for a valid entry. So same requirements. Identify the trend. It's in a strong uptrend right here because price is above the K2 pivots and they're spread out. Identify a pullback. So price shot up, retraced right here. Identify rejection, rejected off level 4 right here, pushed on up. Lastly, identified a valid K2 signal. Right here we have a valid buy signal or a buy. And then put your stop loss at the previous swing, which should be down here for about 115 pips. And then you let it run. And there you go, profit target. So it works on FX too. But you would have to trade it on a pair that actually moves. You can't trade this on something like, I mean, technically you could, like Euro CHF. Actually, it would work here. So you can see price came up, rejected. I mean, this wouldn't be a valid entry because price already broke the pivots. But you can see right here, it still works. So it worked down here. It's just, it's by preference. If you want to hold this trade for like a couple of days, then you could do that. But personally, I like to get in and out of trades rather quickly. So let's look at S&P. You want to see S&P real quick? Let's see. Same situation as we discussed earlier. You'd have to identify a strong trend. So right here we do have a strong trend, but it's not a valid sell, so that wouldn't be an entry. But looking at it over here, we can just rewind somewhere over here. So you can see right here, price came up. Let's see if I still have the. There we go. So right here again, you want to identify a trend. Right here, it's trending upwards, pretty strong. Identify a retracement pullback. Price shot up this way, retrace down this way. There's the retracement. Identify the rejection. You can see right here, price rejected off level 4. Lastly, identify a valid K2 signal. Right here is a valid buy signal. It's a green buy signal with a green bullish candle. So this is all requirements are met. You can enter on the open of the falling candle right here. Place your stop loss at the previous swing, which is right here, 524, 524 pips. Let it run. Profit target, same thing. It works the same on the 30-minute. Same difference. So yeah, there'd be another entry there. Actually, these wouldn't be entries. Technically, they're still entries, but I personally wouldn't take them because I don't like when price pulls back below, a certain zone, because that would make me think that price is it could possibly reverse. But looking right here, what are those requirements again? Whatever. I'm just gonna okay, so right here. So if I rewind to this one right here, this actually meets the requirements. So right here, identify the trend. You can see right here the pivots are angling down. They're kind of spread out, so it's a strong downtrend. We identified a pullback right here. Price came down, and then it retraced right here. Price kind of passed the pivots, but not 100%. They're still within the pivot zone area. So we had the pullback right here, the rejection right here, valid K2 signal right here. It's a sell signal with a red bearish candle. We have all requirements met. So in this situation, enter sell. Put your stop loss at the previous swing, which would be somewhere around here, about like 180 pips. And that's about it. Let it run. And there you go. See, this is why we put it at the previous swing, because if you put it too close, you would have gone stopped out. You put it at the previous swing, just perfect. And then it hit profit target again right there on the 30-minute. So we applied it on the 30-minute, the 4-hour, and what else we have? The 10-minute if you want to scalp it. Same difference again right here. So same situation again right here. It's Actually, it would be this one right here. So this would be a little risky because, like I said, when price closes above the pivots, that makes it a little risky because price has already broken all the pivot zones. But right here, this would be a valid one because price didn't break. So right here, identify the trend. Obviously, it's trending down. Identify the retracement. Price came down or traced up. Identify rejection. Rejected off the level 4 up here. Lastly, identify the valid K2 signal. Right here, we have a sell signal with a red bearish candle. And then we can enter on the open of the following candle right here. Place our stop loss at the previous swing, somewhere around here, 125. So 125 pips for a scalp. You let it run. Let's see, does it hit? It hits. All right, cool. So we hit profit target right there. It got really close to the stop loss. I don't trade S&P, so I don't know what's a big stop loss or not. So I don't know if this was too close. Maybe we could have pushed it back even further because it still would have hit TP regardless. But if you match it up perfectly with the previous swing, you can see price gets really close and then it fakes people out. It stops people out. This is the problem. You have to factor in spread, because if you don't factor in spread, you might have gone stopped out right here. This is how the brokers trick you, or they trap you in these losses, because they spike price up a little bit, they stop people out, and they drop back down. Again, right here, they spike it up to catch all the FOMO traders, and then they drop it down again, spike it up, catch people again, and then drop it even again. So that's like one thing that you might have to take into consideration. But yeah, I think that's about it for S&P. Unless you guys want to see any other pairs, I don't have any other questions. So yeah, I think I'll give it a few more minutes. If you guys have any questions, feel free to put them in the Q&A. I mean, otherwise, we're probably going to cut it early today. We've been on for about an hour and 32 minutes. So any questions, feel free. I'm here and I'm available if you guys have any questions. Otherwise, I'll be available in the chat. So if you guys want me to show you anything else in the chat, I'm available there too. Otherwise, yeah, I'll give it a couple minutes and then I'll sign off for the day. All right. So I guess that's it for today, guys. Yeah, it was a nice, slow trading day today. I mean, there wasn't really much to take. We did have a few TPs for US 30 and GJ today. Just looking back at US 30, if you guys are still in it, it's looking great. Looks like it's coming back down. If you do have a sell signal, you can take. This is an example of the strategy that I was just going over. Right here, if you took this trade, right here, you put your stop loss at the previous swing, which would probably be somewhere around there for 325 pips. Hit TP right there. Again, right here. So right here, it's in a strong downtrend. It's retracing right here, and there's a nice rejection. So if we get a sell signal, that'd be another valid sell entry. But like I mentioned earlier, the markets are closed, so volatility is very, very low. It's way too risky to enter any trades, in my opinion. So personally, I probably wouldn't take this if it appeared, just because it's moving like way too slow. But yeah, guys. All right. So it was a great live trading room, trading webinar. If you guys are new here, just a reminder, I have this every Tuesday and Thursday at 5 p.m. So if you guys have any questions, feel free to come through to the next webinar, and we can link up at around then. All right, guys. Talk to you guys later.
Bye, Shawn.
All right, bro. See you later.